All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. I've had some inquiries about, what it looks like when I trade aggressively. Like I've shared plenty of videos kind of showing you what my trade plan is, right? Now, I'm very, very strict when it comes to my trade plan, especially because this year my goal was to put more size on. So in doing that, it certainly layers in a new level of discipline, right? Like you can't screw it up when you're increasing the amount of size you're putting on a position. But there are more times than not that my trade plan just doesn't set up. Like it just doesn't come around. Like like I can go a couple days, I can go a couple weeks without even placing a trade that meets my trade plan. So people ask me, they're like, what do you do in the interim? Are you willing to take different trade setups? And the answer isn't no. I'm not afraid to take other setups. I must have a lot of conviction in that the market's trending in a particular direction. I must be very attracted to the price action because I'm going to now purely take these trades off of really two things. I shouldn't say two things. I'm going to look at volume. I'm going to look at price action. I'm going to look at liquidity, and I'm going to look at order flow. I'm going to look at time and sales. I'm going to look at a higher time frame. So I'm going to look at a handful of things, and you're seeing one screen. There's a screen right next to it. The screen next to it, I'm just going to tell you exactly what's on it. Time and sales, right? So I can see when there's large orders being filled. And then to the right of it is a higher time frame, displaying all the potential support and resistance areas, key areas that I may bounce into, including daily pivots, weekly pivots, prior highs, prior lows, channel structures, trend lines, blah, 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 blah. All that stuff that, at least to me, I find meaningful. So then I come over here to this basically blank chart, and now I'm looking for my price action, my preferred price action, right? Like if I'm going in an uptrend, I'm looking for, as I mentioned kind of previously, the first thing I start looking for are kind of levels of support. Like, do we set a level of support that now the sellers ultimately cannot void, right? Like that's pretty important to me. So, as the market's going up, I'm watching the volume. I'm watching the order flow. I want to see who's in control. I'm looking for liquidity. This thing here, if you've never seen it before, it's called the book map. The book map shows me where there are contracts on the book, meaning active live orders in the market. I don't know if they're buy or sell orders, but I do know that there are active orders at all these levels, and depending on the color, tells me how many orders there are waiting at that level. Once those orders get filled, I now come over here to something called a footprint chart. The footprint chart now tells me inside of each candle where those orders got filled. Were they buy orders or were they sell orders, right? Were they bid or ask? Where did they get filled? So I now know what the percentage of buy orders are versus the percentage of sell orders. I have volume delta, things of that nature. I'm not going to get deep into that through this entire, video. But here nor there, I can very quickly take a glance and see in this candle, I have 70% buying and 30% roughly selling. And then I can see, does that stay consistent or not? Now, this is obviously into the close of the day, at the end of the week, and whatever. I'm not going to put great weight on it. But in this instance here, I'm trying to buy the market higher. Let's use like market hours, right? This is way early in the morning. This is like 4 o'clock in the morning. So let's just take this kind of chunk of price action, right? This is from like 7 o'clock here, 8 o'clock, 9 o'clock, 10:30, kind of whatever, right? So what am I looking for? I'm looking for my price action. Now, it's very obvious that the market has rolled over, right? So when the market has turned over, now what am I looking for? I look at my chart on the other screen and I go, all right, have I just tested a prior high? Am I at a daily pivot? There's a pivot right here at 74.98. So I definitely don't want to short above that because this should be support. But if it's not, there's a better than not chance that we kind of start squatting here, and there's really no interruption until we drop all the way down here to $74. So, guys, this is a massive gap. So, what am I looking for? Now I'm looking at, now that I know I have this whole big area to work with, I'm looking for key levels in here of liquidity. Looking for where other market participants are looking to trade. Now, understand that the candle could come down, and then there could be new liquidity here at 90 when price pops back up. One of two things is going to happen. Either there's going to be buying or selling. If there's selling, price action starts coming back down. If there's buying, then price action is going to go back up. How am I going to know what that liquidity turns out to be? I'm going to look at my footprint chart here and see who's in control and exactly at what price point those orders were filled at. So taking now all this into consideration, keeping my eye on time and sales, looking for massive orders getting filled, I can now come over here and say, all right, I got to start putting a plan together to try to get short below this daily pivot, 74.98, that we've basically kind of failed at, right? So, I mean, I don't have to wait very long. I'm just going to start isolating areas where buyers step back in, but sellers ultimately kind of prevailed, right? Like, that's the whole game. I'm looking now, I'm trying to sell the market. I'm looking for resistance or consolidation, right? And it really comes in really fast. Like, it happens right here. Okay? Just kind of tuck that up right there. I take a 3-candle consolidation. Sellers step in, right? Notice that there was nothing here stopping them. Boom, lower, boom, lower, boom, lower, boom, lower, right? Like, below the pivot here, 90, 98, we've clearly failed at it. I have a massive gap all the way down here. Now, I'm not trading this because this is counter trend to the higher time frame. So I'm not looking to hold this, right? I'm looking to get paid. I want to jump in here, and as soon as this thing starts going into my profit, I am taking profit, taking profit, taking profit, taking profit, and I am stuffing that stop literally to my entry as quick as possible, right? I'm looking over here for any new liquidity popping up. I'm looking for layers of liquidity below because I don't know if they're buyers or sellers. I just know that there's interest there. So they may be covering their short as well, or they may be looking to buy to push price action back up. But ultimately, at some point, we fell into some level of liquidity, right? That liquidity, there was no technical support here, but the buyers, the liquidity line we fell into at this level, there was more buying than selling, which was pronounced on the footprint chart saying, hey, here's your order flow. There's buyers outweighing the sellers, and this is what happened. We pushed back up until what happened? We made new resistance, right? There's new resistance, okay? Now, I wouldn't try to short off that, but I would wait and see how things went. Okay, what do I have here? I have sellers in control. I have buyers push back. Buyers fail to overcome. I look for that nice tight price action. Price action falls out of here, right? Closes here, retests, sells off. Listen, it's not huge. 58, 45. Take some quick profit. Move your stop to break even. Get stopped out. So what? Because you don't know when it's going to do this or not. Now, listen, there may have been more liquidity here to take this small correction, but you have it here yet again, right? Like, you're just always looking in a downtrend for where the rejection occurs. Like, here's the rejection. Here's resistance. Where's my consolidation, right? It's really simple. Take a line. Like, guys, this is not high-tech shit. Like, this is just bare price action. If you don't know how to read price action, call me. I'll teach you. Right? Like, there. Look at that. There's like there's a correction, pullback of wicks, consolidation, price action falls out, just about comes back and retests, and tumbles again. This is how I make a paycheck when the market's not giving me the trending conditions I'm looking for. I'm purely playing price action, liquidity, order flow, time and sales, support and resistance. This is a very, very fast very, very aggressive, you got to be quick to take profit. You got to be quick to advance the stop. There's no room for error. This requires a lot of discipline and a lot of practice. And you're going to take losses because it is aggressive, right? Like there's some days you're going to go backwards and then you got to fight your way back all the way to break even and then turn a profit. So this is not for the faint of heart. But believe it or not, this is what most traders, retail traders, desire to do. And it's the hardest thing to do. Whereas if you just followed my very conservative trade plan, you wouldn't take a lot of trades, but the quality of them would be incredibly different. So I preach that trade plan because that trade plan is the more conservative, more consistent, more, I don't want to say safe, but less riskier approach to trading. If you can interpret everything happening on my two screens in milliseconds and put a plan into action, this could be very rewarding. But if you're not about to look at a higher time frame, confirm all your levels, look at time and sales, see any big orders that are getting filled at the bid, the ask, limits, whatever, you got to absorb all that content. And then look at the book map, absorb where all the liquidity is in the market, interpret that liquidity as it gets filled on some style of footprint chart, or order flow matrix, and then pair all that with the price action. Like, guys, you got to be able to sweep your head on two screens very quickly and compute all those things and go, yes, this is a lower risk setup. I can probably start taking profit. Yes, it's probably a lower risk setup. I can start taking profit. No, I don't want to short into here because there's liquidity on the book map. I don't know how it's going to fill. Obviously, once this filled, there was more than not a buying bias that pushed this up. Now, notice something. Percentage of buyers, percentage of sellers, right? There has to be an imbalance in order for the price action to move. But how much of an imbalance, right? So for me, this only really matters to me when price action hits a key level on the book map. So when price action approaches a key level of liquidity and those orders get filled, this is what tells me ultimately who was inside of that liquidity. Was it more buyers or was it more sellers? If it was more buyers, then we probably push back off. If it was more sellers, we probably continue lower or whatever it may be, or we reverse. But with all this happening, it's one foul swoop. And you have to do this with one market at a time, okay? Because you can't focus on higher time frame, time and sales, liquidity, order flow, footprint, who's filling at what price point between those two components, interpret the price action, execute the trade, manage it, handle the stop, take the profit. You can't do that on multiple markets. I genuinely don't believe that it can be done, right? So you choose whatever your market is if you want to aggressively trade. But there is not one piece on my two screens here that I would do without in order to trade aggressively like this, right? Like you could do it blind and get lucky, or you can do it with a great amount of accuracy by understanding who's in control, when, where, and why, how the orders are coming in, how they're getting filled. Approaching that support or resistance is going to be super, super key. That's how I desire to do it, right? Because I'm not about to miss a step somewhere because I don't want to sell into support or sell into buyers. I don't want to buy into sellers. I don't want to buy into resistance. And I can identify all those things by taking a clear sweep between my two screens. So some people have asked, what does aggressive trading look like for me? This is what aggressive trading looks like. For most people, if you saw my two screens running in real time, you would get extraordinarily overwhelmed, and I could completely understand why. But for me, this is what it takes to do this with a great amount of accuracy. So I hope this video was helpful and answered some questions. God bless you guys. I appreciate you guys watching the content. Please like, please subscribe. I look forward to creating more for you.